Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Thursday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100, and I look at the 10-year. Brian, it's great to see you as always. Let's talk about fresh levels you're watching.
Absolutely here. So yeah, as you noted, there's a big move today in the 10-year Treasury yield. I think that's what you can see right now. This arrow is pointing to the first week in January when we had the breakout above 96 basis points. You can see they had consolidated at that level, which was previously the June high. And then the breakout, and today we're up to 1.72%. The Fed had an FOMC meeting yesterday, and Powell reiterated his willingness to let the economy continue to roll on forward, and so any concerns about the economy overheating is certainly not being spoken about by Chairman Powell. So the markets took that along with the dot plot, which showed more Fed officials expecting rate hikes in 2022. And as a result, we're seeing that continued move where value is outperforming growth. So the the Nasdaq-100 is down 2.5% today. This is how it looked last Thursday when we were looking at it, when we highlighted the 20 and 50-day moving averages as potential resistance level. Here it is now. So that was a week ago, right here where my arrow is. It did have a one-day pullback and then broke out to higher highs, but it lasted for 1 or 2 sessions. Yesterday's reaction from the FOMC, you seemed like a rising tide lifting all boats, but today the sharp reversal lower, down 2.5%. So at this moment remains to be seen where we go from here. We did last week, or 2 weeks ago, I should say, test the lows, which were previously a top from October and August. We closed right at the August highs on one day, and then made an intraday low at the October high. So that's 12,200, 12,440. Those are the two key levels to the downside to look to if we see further weakness from here. The overall longer-term trend is still definitely higher. One thing I want to point out is that 20-day moving average has been something, throughout this entire uptrend off last year's lows to keep an eye on. We could see that during the uptrend last spring and last summer, this middle line here, we're looking at the Bollinger Bands with the 20-day moving average in the middle. And you can see during most pullbacks, the 20-day average was a level where support was held and the index continued higher. When that was broken convincingly, then we entered that period of consolidation last fall. And then on the resumption of the uptrend in the fourth quarter, the 20-day average again was a continuous support line. So we're now today breaking down back below it. We only got above it for 2 trading sessions on Tuesday and Wednesday. So wouldn't surprise me if we have continued weakness in the near term. But we definitely look to these prior lows that we just recently hit 2 weeks ago in early March as potential support. Again, 12,200, 12,440.
All right, Brian, appreciate the update as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.